Central Bank. The Reserve Bank of India is the central bank of the country. Now let us see. Reserve Bank of India, its headquarters is in Mumbai, Maharashtra. It was established in the year 1935 on the 1st of April. It is under the Ministry of Finance, Government of India. Now, the Central Bank of India is Reserve Bank of India, which is responsible for the issue and supply of Indian rupee and the regulation of the Indian banking system. We will go into details, but before that, let us define what is central bank. Central bank is an apex body that controls, operates, regulates, and directs the entire banking and the monetary structure of the economy. Let's look at the functions of central bank all at once first. First and foremost is the bank of issuing notes. Then comes the banker to the government, bankers of the bank, lenders of the last resort, custodian of foreign exchange. It has the function of a clearing house and as the controller of credit. We will look at these functions. Central bank is an apex body, means the topmost, or the prime, or the supreme. It is a topmost bank in the country which will look into the banking system in the country. We will take the first function of the central bank, which is bank of issue. Reserve Bank of India is the central bank of India and it has the monopoly right. Monopoly means it has got the exclusive right of issuing notes. Issuing of note is done by the Reserve Bank of India and no institution, no other bank in the country will have this right. Every country has got only one central bank of their own. Like we have the Reserve Bank of India, likewise various other countries like England. In England we have the Bank of England and Bank of England. It is perhaps the oldest central bank in the world. Likewise, we have Bank of France, we have your Bank of Spain for Spain. In United States, we call it Federal Reserve. India also has a central bank in the form of RBI, which will be the sole authority. It will be the sole authority, and when I say sole authority, it means that RBI has the exclusive right of issuing the notes. And what kind of notes RBI is going to issue? Unlimited legal tender. The difference between the unlimited and the limited legal tender. The notes, the paper currencies, alright, they will be called as unlimited legal tender. And unlike that, the limited tender will be your limited legal tender is the coins. And let me remind you again, coins are not issued by the Reserve Bank. Coins are issued by the Government of India. The Ministry of Finance is responsible for the issue of coins and 1 rupee note. Let's look here. Indian monetary system follows the paper currency standard. Okay, the name of the standard is known as paper currency standard. The name is paper currency standard, but the issue of coin is also allowed, and the issue of this paper currency will be done under the minimum reserve system. And under this system, the Reserve Bank is supposed to keep a minimum reserve of 200 crore rupees. Alright, a minimum reserve of 200 crore rupees will be kept with the RBI, out of which 115 crore rupees are in the form of gold reserve. The remaining 85 crore rupees will be in the form of foreign exchange. So this minimum reserve system is a system followed by the Central Bank of India, under which 200 crore rupees should be kept as minimum reserve in the form of gold and foreign exchange, out of which 115 crore rupees should be in the form of gold reserve. I just made a mention of foreign exchange and gold reserve. Gold reserve, you know what gold is, but foreign exchange means any currency other than the country's own currency will be called as foreign exchange. Now let's come to the second function, which is banker to the government. So as a banker to the government, central bank functions as banker, as an agent and financial advisor. Let us discuss that. As a banker, the Reserve Bank of India is going to manage all the accounts. See, government is an entity. It has got many functions, roles, many duties to govern, to administer the country. For that reason, the funds, the financial matter is very important. For that, government are going to obviously have many accounts. So all the accounts which the government are going to have are opened in RBI and is managed by RBI. RBI manages accounts of the government. Besides that, RBI is going to act as an agent. RBI will be an agent which deals and takes care of the buying and the selling of securities on behalf of the government. I mentioned already that government has got many functions on a day-to-day basis. It has got to make expenditure on many fronts. So in order to do that, government requires fund. When government is in need of fund, government borrows from public, government also does expenditure. So all these things are going to be taken care of by the RBI as an agent. So for that reason, RBI acts also as an agent, and as a financial advisor, RBI will be responsible for making government aware of the many financial happenings in the economy, be it on the ground of inflation, be it on the ground of the deflation, what kind of a trend is going on in the economy, and what kind of a step, what kind of action should the government take. RBI will provide advices on financial matters. So in that case, the government has a confidence on RBI, okay, and if money supply shortage is occurring in the economy on the advice of the financial matters by the RBI, government will take decisions to solve the problem of uh, deflation. And if there is excess of money supply happening in the economy, then the government will cut on the supply of money. All right, money supply. The third function is RBI as banker's bank. Now, this function of RBI is very interesting. RBI is going to be the bank to all the commercial banks in our economy. And the relationship they are going to have is somewhat similar to what we as an individual have with the commercial banks. In this, we will see that the central bank, which is the RBI, will accept deposits from the commercial banks and offer them loan. RBI will accept deposits from commercial banks and offer them loans. This is like we as an individual, we have the relationship with the commercial banks. Likewise, the commercial bank will have that kind of relationship with the RBI. When they want to deposit excess fund, then they can do so with the RBI. And when they are in need of fund, then they can approach RBI and the RBI will offer them loans. Of course, under certain conditions, like keeping government securities or other securities as a collateral. Now, as a banker's bank, RBI also provides clearinghouse facility. Okay, we will discuss this clearinghouse as a separate function that is coming up shortly. Okay, I will explain then what is clearinghouse. As a banker's bank, RBI also supervises. RBI will supervise the commercial banks. RBI is the authority. It is the currency authority and it has got many directives. RBI will have directives which needs to be followed by the commercial banks. And if any of the commercial banks fail to follow the directives or the regulations which are given by the RBI has the power to supervise and tell those commercial banks to follow the directives properly, particularly relating to the matters of CRR. What is CRR? Cash reserve ratios. So, in order to maintain the money supply in the economy properly, RBI checks on whether the banks are properly following its directives on many matters, and CRR SLR maintenance is one of those. Okay, so for that matter, if any of the banks are found not complying with the directives of the central bank, then the central bank has the power to punish. All right, to punish the commercial banks either by asking them not to what to say extend any money supply any further, by limiting or restricting on the expansion of the branches. It could be anything. Okay, so as a banker's bank, RBI has this following functions. Now the next function is lender of the last resort. If a commercial bank is having some financial problem, if it fails to get any financial accommodation from anywhere, then as a last resort, this commercial bank is going to approach the Reserve Bank of India. Commercial banks can approach RBI when it fails to accommodate from anywhere. The commercial bank will of course try before coming to RBI to get the finances from other sources like other commercial banks. But if they are unable to do that, as a last resort, they will come to the Reserve Bank of India. And after that, the RBI can advance loans to these commercial banks in situation of emergency. In the emergency situation, RBI is there to help the commercial banks, but this will be done by offering them loan. This is done by the RBI to ensure that the banking system is not harmed and also to stabilize money market. If there is any instability in the money market, it harms the entire economy. And in order to mitigate that, in order to or prevent such situations, the RBI will come as a savior to the commercial banks who are facing problem. The fifth function is Reserve Bank as the custodian of foreign exchange. Any currency other than our own country's currency will be called foreign exchange. The example will be your dollar, pound, yen, euro. These are few currencies of the foreign countries. Now India has got its own currency. This is a symbol of India's currency, rupee. Okay. Now, central bank is a custodian of the nation's foreign exchange reserve. There is a term called as foreign exchange reserve, or forex. Now, this foreign exchange reserve is also very important. The stability of this foreign exchange reserve is of utmost importance for good health of our economy. Reserves are kept by the Reserve Bank of India. We also have the idea that under this minimum reserve system, these reserves are going to be kept in the form of foreign exchange and gold reserve. So, foreign exchange plays a very important role in maintaining a stable economic condition. Reserve Bank of India exercises managed floating. It refers to the sale and purchase of foreign exchange. Okay, with a view to achieving stability of exchange rate for the domestic currency, that is for rupee. Now, why is this important? Now, when I tell you about this stability of exchange rate for rupee, you will have a slight idea. All right. When you try to convert the value of rupees in terms of dollar, I'll just take as an example. Currently, it has been often seen, and you have known also, that 75 rupees equals $1. What does it mean? It means that for every $1, you have to spend 75 rupees. Or if you want to get $1, you will have to spend 75 rupees. And this value 75 is not constant. You will see it keeps fluctuating depending on the demand and supply condition of the foreign exchange in the market. So, in order to maintain too much fluctuation is not good for the economy. Like, say for example, if the currency has for every $1 from 75 rupees, if we have to spend 90 rupees, it is not good. That means we have to spend more from our pocket. All right, sometimes it may fall also to maybe 45 rupees. If the fluctuation is very often, if the condition of rupee and its exchange rate is not stable and it's not constant, then it has a repercussion. It has got its impact on the economy, on the entire economy as a whole. In order to maintain such stability, the RBI will follow managed floating, which is what? The sale and purchase of foreign exchange. That is the function of RBI as a custodian of foreign exchange. Now next is your clearinghouse function. RBI functions as a clearinghouse. We know that banks, when I say bank, I mean the commercial banks. Let's name them Commercial Bank A and Commercial Bank B. Now commercial banks have got interbank claims. They are going to draw checks on each other's name. Suppose if Bank A has drawn a check of 10,000 rupees, the Bank B receives 15,000 rupees check drawn on Bank A. Okay, so what happens is, instead of both banks A and banks B doing the financial transaction between them, both these checks are going to RBI, because both these banks A and Bank B are going to open their respective accounts with RBI, isn't it? Reserve Bank of India will have accounts of both Bank A and Bank B. So if they are having account there, then money that is received by them through checks given into this account, and it will be cleared through the by the RBI. So the balance between the two is what? 5,000 rupees. If 5,000 rupees is the balance, that means they are going to be cleared by the RBI without the respective banks A and B having to transact any money between themselves. The seventh function is RBI as a controller of credit. As a controller of credit, RBI performs one of its principal functions, control of credit. By performing this function, RBI influences on the money supply. Supply of money in the economy is done by both the central bank as well as the commercial bank. Money supply that is done by the commercial bank is not through the issue of currency, but credit is going to be created by the commercial banks from the deposits. We have learned that already in the past classes. Now, by how much amount this credit is going to be created will be influenced by RBI. If RBI feels that excess money is available in the economy, then it will try to absorb the money supply in the economy. And when there is shortage of money in the economy, it will release money supply back into the economy. This will solve basically the problem of inflation or deflation which is occurring in the economy. How the RBI uses this function to control the supply of money in the economy, we will do that when we study the control of money supply. We have defined, we have learned the functions of the central bank. Okay, these are the 7 functions primarily. So thank you very much for joining. We will continue with the control of money supply by RBI in our next class.